After we realized that the economic growth that was reached was 6.1%, as opposed to the projection of 5.2. That was an indication that there was something that was changing positively in our economy. But of course, we need to sustain that and even to reach higher growth in 2017, which I'll explain as well. So we took several measures. I will just mention the major ones. At the time, we had a very big problem with our trade balance and the current deficit. So we took a number of measures to promote export, not only in volume, but also in diversification of export the products in the region, but also overseas. So in that line, we continue to implement our policy of Made in Rwanda by supporting local manufacturers to increase and to diversify the exports. So we continue to invest in our industrial parks. We continue to build the capacity of our export growth facility, which is managed by the Rwanda Development Bank. A number of processors and exporters have benefited from that facility. But also we implemented several fiscal incentives for domestic manufacturing, like exempting importation of raw materials, inputs to production from taxes.
Right, I'm sure we'll jump into a bit more on that. Still on incentives, since you mentioned that, so let's try into what has been happening with the IMF. So a study by the ministry about the value of tax incentives, and then comments by the IMF that is that we lose about 50% of VAT on incentives. When are we likely to review it, or is there anything that is being done to cushion us from that?
Yes, but on the other side, we see also benefits from that. Right. When you see our growth in export, like in 2017 alone, our export grew by 44.5%. At a time where we are really struggling to reduce our trade balance. Right. 2017, our trade balance was reduced by 33% in 1 year. And the ratio of current deficit to GDP reduced from 15.8% to 6.5%. So this is also the major achievement in trying to reduce external imbalances.
Right. So in regards to incentives, we no need for review at this particular point, right?
It's just we have to monitor what the cost effectiveness of it, what we are achieving. So it is not one exercise, it is continuous monitoring.
Yeah. Now, also in regards to the global income ranking, right?
Yes.
The term poorest country is something that we're trying to move away from. Of course, everyone is avoiding that word, but it's the one that comes out in the World Bank. Poorest in 2000 to 20th in 2015. How are you planning to elevate this further? You've talked about the 6.1%, but we'd like to hear maybe whether there's anything more deliberate.
It is important to also to know where we are coming from. After the genocide in 1994, our GDP per capita was $146. Currently, we are $774. Still low, but you can see the change. It's almost 7 times. So if you got the ranking, you are still low. We are still working hard to improve it. But also we need to know that the GDP per capita is just one of indicators of development. It's not the best one. Because if you compare GDP per capita from among several countries, you may find that some countries with low per capita income actually have a better standard of living, of population, compared to countries which have maybe 3-4 times. This will depend on the other social policies that try to reduce economic inequalities, try to provide public goods to citizens, ensuring access to education, to health, to electricity, to water and sanitation, to etc. So When you compare our social indicators as Rwanda at that level of income, we are already comparable to middle and to some higher, upper middle income countries, while still in the category of low income. So due to those policies I just mentioned. If you see our access to education, if you access the health coverage, if you see access to water and sanitation over 80%, if you see ICT penetration, if you see the mobile phone penetration, if you see financial inclusion, so all those indicators are high, above the standard of the GDP per capita you are talking about.